Hi friends, I'm back with one more interesting video. Today's video is on how the rising VIX will become a nightmare or enemy for a option seller, and on the contra, how the rising VIX will become a friend of an option buyer. Quickly, let me take you to sensible. Okay, so for example purpose, I've deployed a ironfly which basically has two bot legs and two sword legs. This would be like ultimate example for us to see how the VIX will become enemy for the I mean to say rising VIX will become enemy for the option seller, right? On the contra, how it becomes a friend for the option buyer. So this is my iron fly. Okay, and if you look at the sensible tool on the right extreme, the bottom part, this entire box is the strike wise IVs. Okay, so we have all the four legs, right? So based on them, this will show the individual legs current IV. Okay, 35,600 is our PE buy. Okay, so current it is like 40%. 36,100 is our sold legs, for which we have the IV at 34, at the level 34, and 36,600 is our call buy, which is at 40. So for you to get more insight, what I'll try to do is like I'll just try to take individual legs and we'll see. Okay, so now the reason, see, majority of the traders they go for buying the put with an intention of, right, or else with a view of market going down, right? Whenever we go for buying the put, it clearly says that whenever our view is bearish, right, we go for buying the put as an option buyer, not as an option seller. Option seller will, right, they'll go for the selling the call, but let's act as an option buyer for this example, for this leg. Okay, so now what is the market view? Whenever the market goes down, right, we'll start seeing the profit. So what I'll try to do is like I'll just try to simulate in the sensible by taking the market down for 1%. All right, so the moment I took the market down, so I start seeing the profit. 2031 is my profit. But friends, do you think 2031 would be the maximum profit when the market goes down? No, there is a small catch over here, right? So whenever market goes down, whenever market keeps falling, right, as a contra, the VIX will start rising. 90 to 95%, we can say 95% of the time, when the market falls, the VIX will rise. All right, we see the profit of 2008, 2000 over here, but this is not the actual profit. I mean, right, the premium calculation is combined of different parameters like your VIX, your interest rate, your spot, your delta. Different combinations and permutations are there to get to the premium logic, but we'll not get more into that. We'll just discuss about one of the parameter for the premium calculation, which is VIX. Okay, now your profit is 2000. All right, so what did I say? Whenever the market is falling, because we bought the market to 1%, right? Whenever market falls, obviously the VIX will increase, right? The original VIX is 40, right? 40, it stands at 40. So when market falls for 1%, even the VIX will increase, right? So I'll just get it to 45. Just keep a note on profit. 2083 is a profit. When I'm just increasing by 10%, see what happens. Your profit has increased almost like 900 rupees. Just because the market has fallen down, the market fell down or for 1%, in line to the uh, market as fell down, the VIX will increase. So what I've done, I've increased the VIX for this leg, for this P by, right? Whenever we increase the IV, right, your profit will increase, because right, the rising VIX will support the option buyer. That's what I mean to say here. Rising VIX will support, is a friend of option buyer, right? We'll go through various examples. All right, and let's say if the VIX increase by another 10%, right, your profit will increase. Obviously your profit will increase. I'll take the another example. I'll reset everything. I'll get back to default. I'll reset this fix, right? So let's say price stands where it is, right? As I mean, let's say the price stands at 35. This one, where is the price? It stands at 36,060, right? I'll just try to increase the VIX, right? You see the loss of 13. You are at almost at cost to cost. But let's say the market has not moved. Market stands where is it, right? But there is an increase in VIX. So just keep an eye on this profit, guys. I'll just try to increase the VIX. Okay, so straight away you see a profit of 367 with market standing at the static position, but just with the increased VIX your profit has increased. Let me increase to 60, your profit is 900. And let's say what will happen if your market starts falling to 1%, you will get into huge profit. So this is the way the rising VIX will always support the buyer. All right, so this is one of the example. Okay, let me get it back to raise. I'll reset everything. So let's say I'll take the other way example. Market stands at static at the same position 3669, and now your VIX starts decreasing. I'll get it to 30. By this time you should have got the guess right. You will see loss. So falling VIX is not good for option buyer. You'll start looking at the loss. And let's say if your market goes the other way, I'll just try to increase. Right? See, you will see the loss because VIX started decreasing. So this is one of the example for P. Let me take you to the call side buy position. Right? I'll reset everything. I'll get it back. I'll reset the IV and everything. So now we are at no cost, cost to cost. Right? Now, what is the intention of buying the call? Right? You want market to go up. All right. So same thing. I'll just move the market to 1%. You have a profit of 1500. All right, so do you think this is the maximum profit you will get when the market makes a move of 1%? Right, so you know, right, for the profit calculation the premium will get into picture. So for the premium calculation, it's a huge algorithm, right? The premium calculation, no one can predict the premium calculation, right? It all depends on your VIX, on your rate of interest, on your spot price, number of Greeks and everything. But taking this as an example, if the market went up as per your view, because you bought the call leg, market went up for 1%, you start seeing a profit of 1400. But do you think this is a maximum profit? No, there is a catch. So what will happen if the market keeps going up? What will happen to the VIX? When the market goes up, the VIX has to fall. That is the standard, basically 90 to 95% of the time. I'll show you an example by taking you to the VIX chart, but just for now consider that whenever market goes up, right, the VIX will start coming down. All right, so as I said, rising VIX, right, is the friend of option buyer. But in this situation, the market is going up but the VIX is coming down. So what I'll do, I'll try to just decrease the VIX to 30. Just have a note of this profit. 1500 is your profit. I'll decrease the VIX to 30. I'll decrease the VIX to 30. See, your profit has reduced to some extent. From 1500 it came down to 718. So this is what happens, friends, with the rising VIX and with the falling VIX. Rising VIX is always good for buyer. Falling VIX is always good for seller. We'll come to that selling. But take a look. Market went 1% up, but still, rather than getting the profit of 1000, you ended up into only 745. The reason being the VIX will fall when the market goes up. I'll get it to 40. I'll get it to the base state. This was your original profit, but with the rising market, the VIX will come down. All right, your profit is reduced. So let me get it to default. Even I'll just get it to the default position. Okay, so we are at the default position. Now let's say your market is not going up, right? It is static. It stands at the same point. Okay, now I'll try to increase the VIX. Okay, I'll try to increase the VIX. Your profit has increased. I'll try to increase the VIX. Your profit will go up even the market stands static. Okay, I'll take the other way. I'll just make it as default, and from here I'll just decrease the VIX. Right, you will end up into losses. Right, I'll decrease the VIX to 20. Right, you will get into loss. All right, so even if the market, I think I was able to express. I'll raise it just to reiterate, right? Even if the market makes a move of 1%, right? So this is not your maximum profit, because whenever market goes up, your VIX will decrease. So ideally this would be your original profit. So now you got the difference whether to go for call, sorry, put buying or call buying. You got the differentiator, right? So whenever you want to go for buying, I think put buying will give you more profit, for the simple reason being, whenever the market falls, right, whenever the market falls, your VIX will increase, right? Rising VIX will increase your premium of the put side. But as a contra, when you go for buying the call, whenever the market goes up, the VIX will keep falling. So the falling VIX is friend of option seller but not the friend of option buyer. So though you have a great momentum in the market, but still your profit will not match with the profit of the put side. So let me take you to the right, to the, so let's say, see, we'll see what is this. See, from see, let's take this an example, right? From March 8th, right, market had a good rally. Okay, market is going up, right, from March 8th. So let me take you to the India VIX. So where are we on the March 8th? See, March 8th, it's the other way. VIX is falling. VIX is falling, right? Let me take you back to Nifty, right? Market is going up, Nifty is going up. As a contra, what did I say? Right, VIX will start falling. So let's take an example of falling market. Okay, see, from here, let's say 18th Jan. Okay, market is falling 18th Jan. So obviously, I think from 17th or 18th Jan, the market is falling. Let's see what happened to India VIX. What was this date? Around 17th Jan. See, more or less, the VIX is increasing. So this is what happens. I mean, 95% of the time, this is what happens. It's a contra against each other. Your index and your VIX are contra against each other. So here you see the VIX is going up, right, which is beneficial for the option buyer. Okay, let me take you back to sensible. So I think we have discussed about both buying of P and buying of C. I think I would always go for buying the P, right? I've given you the insight why P buying is always better than the C buying. Now let me come to your sell. Okay, these are the sold positions. 36,100 was my sold position. So why do we go for P sell? Right? Our view is, I will not say bullish, but okay, I have a strong feeling that market will not come down on the 36, market will be above 36,100. That's my view. All right. So what I'll try to do is like, see, I'll get everything, I'll reset everything. Okay, so we are at 0. So let's say the market went up, okay, for 1%, right? You have a profit of 2,900. All right, do you think this is a maximum profit you'll get when you sold 36,100? Right, you need to correlate now. Okay, market went up for 1%, so what will happen to VIX? Right, we have discussed many a times, whenever the market goes up, the VIX will start falling. So what did I say? The falling VIX, the rising VIX is enemy of option seller. The opposite of this thing is like falling VIX will be like friend of option seller. So let me take you back to this example, right? We have simulated by taking the market to 1% upside, right? So whenever market goes up, the VIX will fall. So we have not even considered the falling VIX into this profit. All right, though it shows 2,851, but do you think this is a maximum profit? No. Let's say from 35, I'll make it to 25, right? You got the context, right? Whenever the market goes up, the VIX has to come down. So keep an eye on this profit, 2,800. I'll make it to 25. See, see the profit. This is your original profit, and this is the beauty of P side, right? Even in this selling position, I think you should always go for PE selling, right? With the advantage, with one of the major benefit what you'll get is like whenever market goes up, your VIX will start falling. So falling VIX, right, will reduce your premiums, right, will reduce your premiums, so you'll have more of decay, and then you'll start seeing more of profit. Okay, let's say market has fallen down to 15, your profit will increase. All right, friends, so this is one of the example for the selling side, right? How the falling VIX will help the put sellers. All right, so let me and I'll show you one more example in line to this. I'll raise it. We are at the base state. So let's say market is not even moving on the upside or on the downside, it stays static, but still there is a possibility, right, of VIX coming down or VIX going up, right? Let's say I'll increase to 47 and see what will happen. You have a loss of 900, I'm just increasing it to 47, right? Your loss will increase obviously, because rising VIX is not the friend of option seller. Rising VIX will increase the premium, right? Then you'll end up into loss. I'll do the other way. I'll get it to the default from 36. I'll decrease it to 10 points. I'll make it as 26. See, you will get into profit. All right. This is because VIX is falling, so which will definitely reduce your premium. So you'll start seeing the decay in the premium. But rising VIX will not support the seller. Okay. Let me take you to C. All right. I'll reset premium. I'll reset everything. Okay. So now, all right, this is very important, friends. I'm not even looking at the time because this is very important. So why do we go for call selling, right? There is a myth in market saying that we go for call selling as we have a view of bearish. This is not all about bearish. My only bet is market will stay below 36,100. That's it. I'll not say bearish, right? I'll say only market will stay below 36,100. Okay. Let's say it went as per your view. I'm just getting the market down by 1%. You have a profit of 2200. So I think you should start calculating now. Is this your maximum profit? Right? Again, go back to VIX. What will happen if the market falls? If the market falls, the VIX will increase, right? If the market falls, the VIX will increase. All right. So increasing VIX is friend of buyer. So do you think this is the maximum profit? No, right? So let's go to the VIX. I'll just get this VIX down by 10%, right? Because whenever the market is falling, your VIX will increase. All right, I'll get it to 46. Check your profit. Straight away, your profit has reduced. This is what happens with the call selling. That's what I said. It's always a best idea to go for put buying and put selling, right? You got the idea, right? Though the market has fallen for 1%, okay, I'll reset. This is my original. You were at the profit of 2246, but in line to the falling market, the VIX will start going, so your profit will be eaten up by the increasing VIX. I'll get it again. I'll show you like 46. That's it. Your profit has fallen down drastically. So this is what happens, friends, with the VIX. I think whenever we go for any strategy, right, we need to have an idea about the VIX, right? What VIX will have an impact on my all these legs, be it buying late, big selling. So now let me reset everything and I'll show you the consolidated one. So this is my entire trade. Okay, this is my iron fly, right? Rather than, because I've given you an example of each individual leg, so now what I'll do is like, obviously ironfly is a credit strategy. Okay, let me take you to the Greek. It clearly says this is a credit strategy because your IV is minus. So this supports the falling VIX, not the rising VIX. Let me get back to profit. So what will happen if I increase the VIX right? Overall VIX, not individual legs. I'll increase the VIX to 10%. See, you will see the loss because ironfly is a credit strategy, right? Which want the VIX to fall but not the VIX to rise. I'll increase the VIX to 20%. You will see loss. So what will happen? I'll reset, right? We have a loss of 291. I'll just decrease. I'll put a minus symbol. Okay, see, the moment the VIX, overall VIX has reduced to minus 10, you will start seeing the profit with market standing at static. Make it 20, minus 20. I'll make it minus 20. Your profit will increase because the ironfly wants the VIX to come down, being a credit strategy. Okay, so we have seen individual legs. So now we are just trying to manipulate the VIX with the overall legs. Okay, I'll take you to one more final example. I'll take you to the strategy. I'll clear the entire trade. I'll go for long fly, right? This is the long butterfly, right? I'll not take you to the individual leaks, but just a final conclusion. This is, if you look at the Greeks, this is a Vega positive, meaning we want increasing VIX. We want increasing VIX. Okay, earlier it was minus, but now it is like positive. We want the increasing VIX. Let me take you back to this strategy. I'll just see we are at 72 loss, right? I'll just increase the VIX, right? I'll increase the VIX. You will see the profit, right? I'll increase the VIX to 20. You will see the profit of 1,500. All right. I'll do the same thing. I'll decrease the VIX, right? You'll start seeing the loss. It's the other way because this is the, what is this? This is your long iron butterfly. All right. So I'll make 20 minus 20. You will see huge losses. This is the contra for the credit strategy. This is a debit strategy, right? What does the debit strategy requires? It requires the rising VIX, not the falling VIX. What does the credit strategy requires? It requires the uh, falling VIX, not the rising VIX. All right, friends. So I think I've done my job in terms of letting you know how the rising VIX is friend of option buyer, how the rising VIX is enemy of option seller. It's the other way. Falling VIX is friend of option seller. Falling VIX is enemy of option buyer. All right, friends. So just, you can just go to Sensible and you can start practicing, and then you'll come to know what I've been trying to explain you since from last 23 minutes. All right. Thank you, friends. Thank you for watching my video.